All right, candle range theory trader back with you with another video, just talking about trading crypto using the candle range theory. So let's not waste time and get right into it. Uh, while we're going to discuss the 4 hour chart, of course, crypto is a unique market because it's 24/7, 365. You can also use the daily candle range theory pattern. You can check the video for comparing the two, the 4 hour between the daily candle range theory for more info on that. But I wanted the focus of this video to be the 4 hour chart. And using this method, you can make or lose money 24/7. You can really set your own schedule. So as of right now, and I'm in the United States, and we're under daylight savings time, so the times are going to be a little tricky. And I'll talk about that when we get to the chart. But for as of the making of this video, this is November. Okay, these are the 4 hour opening prices for each of the 4 hour candles. Okay, so we got 2300, which is 11 o'clock p.m. Eastern Standard Time. I'm on the East Coast, New York time. Okay, you got to convert that no matter where you are all over the world. You got to work that out. Okay, but it's still going to go in 4 hour intervals. So this part, once you get it, you only got to do it once. But of course, so each one of the candles opens at 2300 or 11 at night, 3 a.m., 7 a.m., 11, 3 p.m., 7 p.m., and then back to 23. It just repeats. Okay, so that's that. So, and when the time changes back, the broker will show. I use Coinbase as the broker on TradingView. So again, it just depends, but you can figure that out. But like I said, you only got to do it once, but you may have to play with it a little bit just to make sure everything aligns. Now, this, of course, is the basic candle range theory pattern. It can appear at any time of the day, so I recommend narrowing your focus. For this video, and as of the making this video, we're going to do the 3, 7, 11. Okay, when daylight savings time is not in effect, this will probably be the 4, 8, and the 12. But since this is the time frame that I'm in, it's going to be 3, 7, 11. But I will go back on the chart and show you the 4, 8, 12s as well, a couple of those. And I'm only going to focus on one crypto, which is Ethereum. All right, so this will be the price action that I'm looking for, the 3 a.m. range candle, okay, the 7 a.m. consolidation. Mainly I'm looking for the doji to poke above or below. Okay, this is just a short example, but if you want to see a long example, you just turn this chart upside down. It's easy to visualize. And then, of course, the trading starts at 11 a.m. So this takes 8 hours to set up. And then during this last block of time right here is when we start trading, and we expect to see a open, high, low, close price action taking out the bottom of the range. Where we're talking about the opening, it goes up a little bit, goes down, and closes. All right, that's what we're looking for. So what should you see when you come to the charts? For a short example, again, you're going to see the range candle, and then, like I said, a doji candle. This is the main thing I scan for, is a candle that pokes above the range, closes inside of it. Sometimes you'll see two short candles as well. This is also good because two small candles can lead to a bigger candle for the third one. And as well, sometimes you'll see a large range candle, and sometimes the middle candle does not poke above the high, but still keep an eye on that one because this is what can happen. Sometimes the traditional range, you're going to see price go up a little bit and then completely tank or rise, like I said, depending on if you're long or short. Sometimes you'll see those small candles have a large breakout to the downside where price will break out of the bottom of this range candle and keep going because small candles do lead to bigger ones. Or sometimes you'll see where this middle candle, how we talked about the middle candle, doesn't break the high. Sometimes either one or two things will happen. It'll do a straight drop, which I do not trade. I have no way to anticipate how price will just go straight down. I don't know. But a better option for me is for price to go up above this candle's high, the range candle's high. And then once it closes back inside of it, then I start trading and anticipating that it's going to take out the opposite side of the range. So where should you be trading? All trades should take place inside of a sometimes slim area. It's going to be between the open price of the candle you're trading, for the example I talked about, that was 11 a.m., and the bottom of the range candle, which in this case would be the 3 a.m. So in essence, if I was looking at this right here, I'm trading below this line, but above this line. This is the 11 a.m. open price right here. This is the 3 a.m. high. Anywhere in there, I'm good to trade. I'm not trading up here. And hopefully I'm not, if I'm trading down here, I'm only adding into positions as it goes into profit. Okay, so that's how that goes. All right, so that again is the trading window. If I'm trading down here, again, I'm scaling in, but my base entry hopefully is in this range right here. Below this range is high and around the opening price of the candle that I'm actually starting to trade. Okay. Now, if you want to use fair value gaps to scale in, that can be an option, and I'll go over that on the chart. And Be sure to just manage risk, set your stop losses, and take profits accordingly. And I'll go over that as well. So let's set up the chart. So here we go. I'm going on Ethereum right now. I'm actually in a live trade. Let me show you this live trade and how this is breaking down. And of course, you don't see it because I'm on TradingView, but I'll show you this live example and I'll show you some back tested ones, and then that'll be it. This is really just a basic video because I don't really trade Ethereum, but people sometimes, very rarely, sometimes people ask, can I trade on crypto and what time should I use? So this video is for them. This isn't the best example because this range candle did take out the high and the low. I'm sorry, this money, quote unquote, money candle did take out the high and the low. Okay. Ideally, we don't like for it to do that. I'm just going to be honest with you. I'll show you a better example, but I am long on this because I'm anticipating this price to rise. All right. So in tiny position, I got my stop loss set down here, but let's go down to the 5-minute chart. There is a fair value gap. I use fair value gaps to just see if there's momentum in the actual trade. There was a fair value gap, which was created right here. If you don't know what a fair value gap is, there's other videos on that. But in essence, it's just a 3 candlestick pattern, 1, 2, 3, and price moves so fast that it creates a gap in price where sellers didn't really get a chance to participate. Do you have to be some fair value gap expert and know everything about them? No, you do not. This, like I said, is just confirmation that there is life or momentum in the trade. If there's no fair value gaps, typically price is just chopping back and forth. But this right here just shows there was a strong move, so I try to capitalize on that. That's pretty much it. I will lose this trade if price goes below this low right here. All right. So this is a long example. The open price was right here at 11 a.m. So I got in, I think, a little bit before 11, but either way, this is the opening price right there. Okay. So let me go back out to the 4-hour. So what I'm anticipating or hoping price does is just goes up and eventually completes this range. Now, although, like I said, this isn't the best example because technically this range has already been completed. This wick, if this wick didn't exist, it would be a stronger setup. But I was just testing this just to see how it will go. Now, let's set up the chart for you guys, though. So here we go. I'm going to take off everything. Okay, so how I set this up was this. The indicator that I used to show the opening price, you don't have to have it. But if you just want to start trading at 11, you can. But for the sake of back testing, I did the indicator called Session Open Price right here by Intrusive FX. And I put it on 1600. Now that's 4 p.m. Eastern Standard Time. But for some odd reason, I don't know if it was the broker server or what, when I put in 1600, it put the line right here on 11 a.m. Okay, I don't know why I did that. And maybe there's another indicator you can use, or you could just resolve to come to the chart at your set trading time and just look for what you want to see. It's not required you have this indicator, but it made it easier for me for the sake of back testing. All right. So, and then also as well, if you do use this indicator, the other sessions that it's going to show, I click on the color and change them to white, and then the opacity down to 0 so they do not appear. So I only have one line showing the opening price at 11 a.m. because that's when I start trading. Remember, let's go back to our pattern. Okay, 11 a.m. is when my trading starts. I'm looking for a 379. I'm sorry, 3711. Okay, long or short. In this case, I'm going long. So that's it. And then the only other one I have is the fair value gap indicator. I use the one by Nephew Sam. It's right here. And for the sake of settings, if you do use it, you click on the gear icon and click this, wait for candle close to identify fair value gap. Just be sure that's checked. And then everything else is fine on the default. And then I click OK. So that'll be that. All right, so here's one good example that I did see. So here's back testing made easy. Once you have the line set up, all you're looking for is these types of candles right here. See how this big fat candle happened at 11 right here? I look for that on my chart. And then I go back 2 candles to see if it played out. I only saw one example, which was right here. There may be more, but let me do a replay option. This is a valid candle range theory long on Ethereum. This is a 7. What did I say? I keep forgetting the time. This is a 3-7-11. This is 3. Candle range high. Candle range low. and then 11. Let me mark the opening price. Opening price is right there. Okay, right here. Let me go down to the 5-minute now. I'd like to see, are there any fair value gaps here? Yes, there are. And let's remember our golden zone. Golden zone is, if you're long, where's the box at? Below the open price, but inside or above the range low. That area right there. Well, it only extended to right here because the candle didn't even go down that far. So the best entry would have been between 11. You could have got in at 11, anywhere from 11 to about 11:20, and then price just took off. Risk to reward, we would have been looking at to the range high 1 to 3, 1 to 4 even possibly. Okay, but at least 1 to 3. All right, so there you go. That's that. I'll do one more short example, or yeah, I'll do a short example and then that'll be it. But for this, I'm going to have to revert to 12 p.m. because of daylight savings. So let me get rid of these fair value gaps. You don't need it. Be sure to save the indicator template as well. Okay, but let me try to find a short example on 12 p.m. I'm just going to do this manually because I don't want to mess with the indicator anymore. And we're just really just looking for distribution candles. So I'm looking for big red candles in essence at 12 p.m. If I find one. If I don't, then I think you guys still get the point, but I'm giving myself about 1 more minute, so bear with me. That's 8. That's 12. That's 8. That's 12. But I tell you what, just for the sake of the video, I'll do this one. This isn't at the exact time, but this is the price action, so that's why I'm going to isolate this. So here's the range high. Here's the range low. Right there. Okay. So this pattern, let me do the replay. Well, let me see. Select the bar. Right there. Okay. So this is this. Okay. This candle doesn't go down as far, but the idea is still the same. Okay. See that right there? Okay. 1, 2, 3. 1, 2, 3. But this pattern is a 12, 1600 or 4 p.m. and then a 2000 hours, which is 8 p.m. All right. So if you want to trade that time frame, that's fine. But this is pre-daylight savings. That's why the times are different. So let's go down to our smaller time frame. Like I said, I just like to look for fair value gaps for the sake of momentum. Let me just check my time one more time. Okay, so we started trading at 8 p.m. or 2000 hours. And you probably could have got in right at 8. I will designate the open time though. So 2000 hours was right here. And there will be times where you can just get right on in as soon as the candle opens. Okay, so you could have did that right here. A short position, say, let's just say, 8:05 p.m. And then for the sake of risk to reward, if you put your stop loss outside of the range and your take profit to the, well, it didn't hit the bottom of the range, but this right here was at least good for 1 to 3. Let's just say we're going for 1 to 3. All right. And then for sake of fair value gaps, to see if there's momentum in the trade. Let me get this back up. And we're looking for those red fair value gaps that show gaps in price. There are some. Okay, so obviously, let me get rid of this. Okay, so you could have had an entry right here at 8:05. Yeah, 8:05 p.m. Entered right there. And then another fair value gap. You could have entered again right here. Then you had another gap. Maybe you want to enter again somewhere in there. Well, actually here, right there. There you go. All right, because I'm big on scaling and I like pyramiding. But anyway, but obviously though, when I talked about stop losses, if you add an entry here, maybe you want to have your stop loss. This one goes to break even, and this stop loss becomes right here. If you add right here, the stop loss goes here, and these two trades are break even. Or just play with different combinations, see what you can do. But you want to lower your stop, or at least have a price alert as you add into these positions. So, but like I said, this was good for 1 to 3. This was a basic, like I said, 4-hour candlestick pattern. But that's it. Same pattern, different asset class and different time frame. But don't be greedy when you're using the 4-hour chart model. Take what you can get in a 4-hour time frame. You would have been out in 4 hours from 12. I'm sorry, from 8 p.m. to what is that? What's the next one? That was what? Yeah, midnight. So there you go, or a little before midnight. Because if you waited till midnight, the price would have retraced a little bit. But that's it. But so this was just a basic video to hopefully get your wheels turning. But the chart's going to be your best teacher. So you got to look for what you want to see, build a screenshot library, go from there. But I appreciate your time and attention. Hope that video helps, and have a great rest of your day. Take care.